Hey everybody, it's Eddie J, and I hope you're having a good one. So there is so much to go over today, and it's really tapping into what the global regulatory climate is, and it's not looking pretty. So I wanted to start off with something positive. Cathie Wood's perspective on Bitcoin and Ethereum and the overall cryptoverse is very positive. And I know she takes a beating when she talks about stocks, but I have to say, her conviction is actually, to be commended, right? And my research shows that history is going to treat her right in the end. I really do. She's right about Coinbase. Coinbase is going to grow. She's right about crypto, especially Bitcoin and Ethereum. They're going to grow, and they're going to be even more dominant than what they are. All right. So looking at that, looking at all of the big players getting into, and I'm talking about institutional level, getting into the crypto space is a very big deal. So we should be paying attention to the little gems that she's giving us and the moves that she's making within that space. Now, couple that with Coinbase starting Crypto435, and you look at a platform that's saying, listen, we want to educate people about the cryptoverse in each of the 435 districts around congressional districts around the country. Why is this? Well, if we educate the people will pressure their legislators to actually have positive outcomes when it comes to regulation. And that's what the industry needs. What I'm hoping for is that Crypto 435 will grow to include more groups, more companies than just Coinbase. And the reason why is because you don't want this to become a lobbying arm that's controlled by one company. You kind of want it to be a very broad reaching organization that can actually help and step up for the crypto industry. Unlike what FTX and Sam Bankman-Fried were doing, which is some very shady stuff. Backdoor deals, weird investments in PACs and things like that. And you're starting to see how that unravels. And I'm wondering how many senators and congressmen will have to give back money. Anyway, Visa and Mastercard are now suffering from that global impact of regulation around crypto, or the rather uncertain regulation around crypto. And that means that, they're saying, listen, we're going to chill. We're going to stop. Right? Whatever we have in place is what we have in place, but we're not going to go any further because all of that uncertainty going forward is definitely painful, and we don't know what we're allowed to do or not allowed to do, and we just don't feel like opening up the risk. Now I want you to take a step back and look at how at that level that regulatory concerns around the globe are stifling big players like Visa and Mastercard. That alone is huge. Here's a bigger problem. You're stifling growth, you're stifling innovation, especially in the United States, where we hope to be a leader. Well, one of the 7 Arab Emirates, UAE's 7, says, hey, we're going to create a free zone for crypto firms. Come here. So unlike France, who's saying, no, we're going to have stricter regulatory, regulations for crypto firms, stricter licensing, and how the G20 is looking to have stricter, they're going as far as actually thinking they should ban crypto. I can't tell you how stupid that idea is, but that says that there are certain European countries or certain, countries around the world that are members of the G20 that are walking down the wrong road. The harder they squeeze, the faster companies will leave their countries and end up in alternative places. And that means that you're going to see a shift. If they keep walking down this road, you are going to see a shift in economic dominance. So you'll see the players that are economically dominant right now that are sitting on the wrong side, sitting with the G20 and saying, oh, we're going to get more strict. You're going to see them lose dominance. And that is not a good thing for them. So I'm hoping that, things like the Crypto 435, comes around and really gets people going, really makes people stop and think, because that's not a good way to go. Then you have Ripple meeting with over 20 different countries to develop their CBDCs. Ooh, over 20. Now, we've already touched on what the impact would be for a central bank's digital currency, right? But I want you to pay attention to something. I want you to pay attention to the reach of Ripple. Keep saying Ripple is huge outside of the United States, and this is proof. This is very much proof. Now, it has nothing to do with XRP at the moment, right? But it has everything to do with Ripple, and has everything to say that Swift is also looking at a major player coming up. Imagine one player helping all these countries to create their CBDCs and how much reach that company would have. Just saying, Swift is a company. And I think that they're going to lose global dominance in a major fashion. Ripple's not the only thing that's threatening their global dominance. I've told you about projects, DeFi projects that are going on right now involving different banks coming together to actually do decentralized financial transactions. So I'm saying that Swift could have a major problem. Now, if you take all of that and you combine it, you have Daleep Singh, who used to be the deputy director at the National Economic Council. He's saying that he's a formerly with the Biden administration. He told a bunch of senators, I believe yesterday, that the Biden administration wants to create the digital dollar. Cool. All right. See where this is going. But he takes it a step further and says, listen, our security agencies are looking at crypto as an adversarial non-state, right? Meaning that it's not state-driven, but can be used to help states that are adversaries skirt sanctions, skirt economic sanctions. And that's true. But we've also seen how it can be used to police that space. So if you regulate well, you can do things like compel Binance and Kraken and Coinbase and other centralized exchanges to not allow or even stop certain transactions. Regulation is going to be key as you look forward, but I think that, by squeezing too hard, you're definitely creating something that you probably don't want. And I think they should rethink that in a major fashion. Just saying, it could wind up being not a great thing for the crypto industry, but it could be even worse when you look at it at that scale. And I mean for those countries, because you can't stick your head in the sand and act like it doesn't exist. You're either a part of it or you're outside of it. And if you're outside of it, there's nothing you can do about it. So better to be inside and understand how everything works and gain leverage from inside rather than trying to push and squeeze from outside. At least that's how I would be playing chess right now. Anyway, you know what we should do? We should get to the numbers. So let me just refresh this because it's been about 10 minutes since I refreshed it. But you can see even from this information, we have very little going on that's dipping below that 5%. None of these coins are, is anything that I'd be looking at. When you look over here, everything, this whole table is you would definitely have to look at. So Nervous Network, I called them out yesterday. They're up 9%. Fetch AI is up 9%. Aptos, something you should be paying attention to, is up 9%. Stacks is up 15%. When you look over your numbers, I want you to pay attention to both sides of this piece. And the reason being is because when you look at both sides, you're understanding how low a coin went to how high a coin went and vice versa. And playing those sways might make you money if you're looking at, doing basically the equivalent of Forex trading in this space. And I say Forex for a reason. And it's because the SEC, in my humble opinion, has no business trying to regulate crypto. And the reason why is because the CFTC regulates foreign exchange moves. So it would make far more sense for the CFTC, which is better tooled for foreign exchange transactions than the SEC, to manage the crypto space. That would be smart. And because it's smart, you kind of know that it's not going to happen, right? Yeah, unfortunate. Don't need to look at that right now, but the fear and greed index, we are still in fear. Now we're back down to 50 when we were at 54 yesterday, but we're still in the neutral zone. So that's actually a good thing. Now, Bitcoin, still battling with that 23,417 line. Yes, we're above it right now, but we're still battling in that tightened zone. I want to see it get back to trying to touch 25,210. That's where I want us to be. So we're waiting. Like I said, I think that spring and summer are going to enter in, positive spaces for, for crypto, especially Bitcoin. But something to pay attention to is going to be how the Fed looks at rate hikes going forward. Like, I really am expecting, unless we get some positive economic data, I really am expecting a 50 basis point move. But even with a 50 basis point move, let's suppose that gets baked in. Everything's even, right? But I don't think it is being baked in. And I think that when it hits, people are going to freak and the market's going to drop a little bit, which means the cryptoverse is going to drop a little bit. So either we're going to see a positive move to the upside, or we're going to see an opportunity to buy in the downside. Mind you, my thought is that downward push is not going to be huge, and it's not going to be for long, because I still expect spring and summer to usher in higher levels for the cryptoverse. It would take a much larger macro event to tamp down what seems to be positive strength and positive opportunity in the space. Just saying. Looking at this, at the big picture, literally Bitcoin 23,740, Ethereum at 1650. Ethereum hasn't been really moving all too much. Not really, not in the percentages that Bitcoin has been moving. So that's something I'm paying attention to. XRP still at the 38-cent level. It's only going to move pennies compared to dollars for, with other coins. Stacks is big. I'm just saying it's a big move. Let's take a look at each one of the layers going across 1 hour, 24 hour, 7 day, 30 day, 90 day, and year to date, right? And you start to realize that year to date, Bitcoin's up 42%, Ethereum's up only 37%. Or almost 43% for Bitcoin. When you scroll on down, you get to, let's say, Polygon, which is up 65%. When you look at Cardano, up 45.24%. That's Solana. Still don't understand it, but they're up 127%. You start to realize that as much as you can believe in Bitcoin, some of these other projects with more going on with their networks are making big swings to the upward side. And that's what I'm paying attention to. I'm paying attention to what are they doing? Because every time I turn around and I hear somebody say, in the next 10 years, Bitcoin's going to hit, $1 million. Let's say they're right and Bitcoin hits $1 million. I want you to take a step back and look at the other spaces and kind of say to yourself, well, wait a minute. If Bitcoin hits $1 million, then it's up 42.88%, right? Almost 43%. Let's just call it 43%. Well, Cardano's going to move in the same fashion, and it's cheaper. So I might be able to get more out of Cardano. And depending on the kind of news that Cardano drops, they won't just rise on the heels of, on the coattails of Bitcoin. They'll also rise on their own. But when I look at something like Polygon, who's up significantly higher than Bitcoin, I sit back and I go, wow, they've definitely got news coming. Definitely, without a doubt. And if they have news coming and Bitcoin rises to that million, what can I do with Polygon? Just saying, pay attention to those kind of correlations, like how things move, how things traverse in different ways. There are certain coins that rise and fall with Bitcoin. There are certain coins that rise and fall higher and lower than Bitcoin. Pay attention to how those moves are made. Anyway, this is Eddie J on Crypto. If you have any questions, do me a favor, drop them down. I'd love to have something to research. Why? Just because I like to learn and share. Have a good one. Bye-bye.